If you don't own assets, you will never be rich. You'll work your whole life, save a little, and still struggle financially. Meanwhile, the rich, they quietly collect assets that grow their money while they sleep. In this video, I'll show you 15 powerful assets that can make you rich, and you'll be shocked at how many people ignore number 7. 1. Rental properties. All right, let's talk about real estate. Probably the most well-known way to build wealth, but a lot of people assume it's only for the rich. That's not true. Think of it like this. If you own a house and rent it out, someone else is basically paying your mortgage for you. Over time, the property value tends to go up, and you're collecting rent every month. It's like planting a money tree, except instead of watering it, you just make sure the tenants don't trash the place. For example, let's say you buy a small apartment for $100,000 with a low down payment and finance the rest. You rent it out for $1,200 per month, and after paying the mortgage, taxes, and maintenance, you still keep a few $100s every month. That's money you didn't have to work for. And in 10 to 15 years, the property could be worth double what you paid. Of course, it's not completely passive. Things break, tenants move out. But over the long run, real estate has created more millionaires than almost any other asset. And the best part? You don't need to buy a mansion to start. Many people get their first rental by just house hacking, buying a small multi-unit property, living in one part, and renting out the other. That way, your tenants cover most or all of your housing costs. Second, index funds and ETFs. Imagine you want to invest in the stock market, but you don't want to spend hours researching companies, reading financial reports, or stressing over stock prices every day. That's where index funds and ETFs come in. Think of an index fund like a giant basket filled with hundreds of different stocks. Instead of betting on just one company, you're spreading your money across a bunch of them. One of the most popular ones is the S&P 500, which includes 500 of the biggest companies in the US. Think Apple, Google, Amazon, and all those giants. Here's why this is a smart move. Over the past few decades, the S&P 500 has averaged around 10% returns per year. That means if you just put your money in and left it alone, it would have grown way more than if you tried picking stocks yourself. Because fun fact, most professional traders don't even beat the market. And ETFs, exchange-traded funds, work the same way, except they trade like regular stocks. So if you want a simple way to invest without all the hassle, index funds and ETFs are basically the set it and forget it option for growing your money over time. 3 REITs, real estate investment trusts. All right, let's say you like the idea of making money from real estate, but you don't want to deal with tenants, maintenance, or a huge down payment. That's where REITs come in. A REIT, real estate investment trust, is basically a company that owns a bunch of properties like shopping malls, office buildings, or apartment complexes, and rents them out to businesses or people. When they make money from rent, they share a portion of that profit with investors in the form of dividends. Think of it like owning a tiny slice of a giant skyscraper, without ever having to buy the building or fix a leaking roof. You can invest in REITs just like buying a stock, and they often pay consistent cash flow since they're legally required to distribute most of their earnings to investors. So if you want to get into real estate without the headaches of actually being a landlord, REITs let you do just that, with as little as a few bucks. 4th, dividend stocks. All right, let's talk about dividend stocks, which are basically stocks that pay you for doing nothing. Here's how it works. When you buy a stock, you usually make money only if the price goes up and you sell it later. But some companies, especially big, stable ones like Coca-Cola, McDonald's, and Johnson & Johnson, actually pay their investors a cut of their profits every few months. This is called a dividend. Think of it like owning a small piece of a business that sends you a paycheck just for holding onto their stock. You're not working for them, you're not doing anything, just collecting money while they keep running their business. For example, if a company pays a 5% dividend, that means for every $100 you invest, you get $5 per year, no matter what happens to the stock price. And if you reinvest those dividends, your money starts compounding over time, kind of like a snowball rolling downhill and getting bigger. So if you like the idea of getting paid without selling your investments, Dividend stocks might be one of the easiest ways to build a steady stream of income over time. 5. Private equity and startups. So you've probably heard stories of early investors in companies like Amazon or Uber making ridiculous amounts of money. That's private equity and startup investing in action. Instead of buying stocks in big established companies, some people invest in small, early-stage businesses before they become huge. It's kind of like being a talent scout, except instead of picking future sports stars, you're betting on future billion-dollar companies. Let's say your friend is launching a new tech startup and needs funding. If you invest $5,000 early on and the company takes off, that small stake could be worth hundreds of thousands or even millions down the road.